In our last report, we told you how the IMF warned Ghana to keep interest rates high. They said the Bank of Ghana should not cut the policy rate, even though inflation had been falling.
And with respect to the question on monetary policy, what I can say is that Ghana has made good progress since the beginning of the program in reducing inflation. Inflation was extremely high at the end of 2022 at 54%. It has now come down substantially to 14% at end June 2025. Going forward, it will be important for monetary policy to remain sufficiently tight, consistent with bringing inflation down to the Bank of Ghana's target range, which is 8%.
Well, that advice has now been ignored by the Bank of Ghana. The BOG has slashed the policy rate, bringing it down from 28% to 25%, and is the biggest cut in years.
The MPC, by a majority decision, voted to lower the monetary policy rate by 300 basis points to 25.0%.
But what does this really mean for you and I? Well, let's break it down, because this is more than just numbers. It's about the cost of borrowing, the prices of goods, and how businesses grow or struggle. Let's start with the basics. Policy rate is the interest rate set by a country's central bank. So in Ghana's case, the Bank of Ghana. It's like the base price for borrowing money in the economy. So when the policy rate is high, it becomes more expensive for banks to borrow money. So they pass the cost on by charging higher interest rates on loans for businesses, mortgages, cars, and even student loans. When the policy rate is low, borrowing becomes more cheaper. Businesses can expand, people can take loans more easily, and the economy starts to move faster. So, when you hear that the rate is now 25%, that's the signal banks use to price their own loans. And in Ghana, the number has been one of the highest in Africa. Back in 2022, inflation in Ghana hit 54.1%. The cedi was falling, food and fuel prices were surging. To fight that inflation, the Bank of Ghana raised the policy rate again and again. It ran from 14.5% in 2021 to 28% by 2023. This helped reduce inflation, now at 13.7% as of June 2025. But it also slowed the economy. In fact, small businesses couldn't afford to borrow. Households were paying 35% or more in loan interest, and investors sat on the sidelines. Now that inflation is under control, the Bank of Ghana has made a bold move. It cut the policy rate from 28% to 25%. According to the governor, Dr. Johnson Esiama, the reason is simple. Inflation is falling and the economy is now stabilizing.
The committee noted that macroeconomic conditions have significantly improved, inflation expectations are broadly anchored, external buffers have strengthened, and confidence in the economy is returning. The July forecast also shows that headline inflation is expected to decline further in the third quarter of 2025 and trend within the medium-term target of 8 plus or minus 2% by the end of 2025, earlier than initial projections. However, there are upside risks to the inflation outlook. These notwithstanding, the impact of these risks on inflation are expected to be offset by appropriately tight monetary policy stance and continued fiscal consolidation. Given these considerations, the MPC, by a majority decision, voted to lower the monetary policy rate by 300 basis points to 25.0%.
Now, let's look at how other countries benefit from lower policy rates. In the United States, before inflation spiked in 2022, the US policy rate was around 0.25%. This allowed companies to borrow cheaply, hire more people, and invest in innovation. Even now, it's around 5.5%, far lower than Ghana's. In Rwanda, policy rate is just 7.5%. This has helped their agricultural and tech sectors to grow quickly. These countries are balancing inflation control with growth. Ghana, with the rate still at 25%, is moving in the right direction, but still has a lot of work to do. Let's bring this closer to home. If you are a business owner, lower rates could mean cheaper loans to restock goods, access to credit for expansion, easier cash flow management. And if you are an individual, it means slightly low car loans or mortgages, possibly lower mobile money lending rates, more job opportunities if businesses start hiring again. And for overall economy, it means more investments, better consumer confidence, and possibly recovery in the housing and retail sectors. This is why the policy rate isn't just for economics. It is a signal that affects the economy from top to bottom. The Bank of Ghana says it will continue to monitor inflation trends. If progress continues, more cuts could follow. For now, Ghana is sending a message. It is time to start supporting growth, not just fighting inflation. And even though the IMF warned against it, the central bank is doing what it believes is right for the country. And that is all for today's episode. Please let us know your thoughts and suggestions on this in the comment section below. And don't forget to subscribe, like and share for more insightful videos like this. Thank you very much for watching. Have a joyful life and see you in the next one. Macrao.